In the last 14 years or so, cryptocurrency has grown in relevance, and what John and I are here to talk about is its evolution and what this means for the state of accounting and consulting and our economic state of U.S. and international business. Bitcoin has been coined the original cryptocurrency, where in 2008 the white papers of the currency were published pseudo-anonymously by a man named Satoshi Nakamoto. And these white papers explained the purpose and technology behind this crypto project. And his efforts was to create something that looks like this diagram to decentralize financing to where banks and intermediaries are unnecessary while not sacrificing privacy. And Bitcoin is the most simple form of cryptocurrency and should only be viewed as currency, where newer cryptocurrencies like Ethereum have a utility in their coding. And we must first understand the evolution of the internet before we can understand Web3, and this is the evolution of tech and cryptocurrency. Starting at Web 1, these were innovated through ideas that came from Apple and Microsoft using Macintosh and Altair Basic. And Excel is an example of this, where an individual uses the software to create whatever they please on their individual computer, where Web 2 was the creation of user interfaces that interact with other user interfaces. And these are softwares like Instagram, Facebook, or online banking. And these interfaces are owned by one company like Amazon, Meta, Alphabet, and the entities own much of the information that its users put onto it, where Web 3 is the utilization of the blockchain by using each individual node or crypto wallet to hold the information that exists on a series of a blockchain. And blockchains like Ethereum, users can create smart contracts that follow programming and create if-then, so-that statements. And the programming is in every Ethereum coin, which means that it can be used to create almost anything virtual. And the limits for Ethereum are endless and are only now starting to make noise in the business and tech industry. And now John will talk about the effects of crypto in consulting.
All right, so the effects of cryptocurrency on accounting. According to GAAP, crypto is an intangible asset recorded at cost, and impairment must be recorded like a stock. KPMG Canada made the news a few days ago by putting cryptocurrency on the balance sheet. The partner in charge up there said they're trying to get their skin in the game because crypto has kind of proven itself that it's here to stay for at least the time being. It's not exactly a fad anymore. The IRS says that you must be taxed on the gain and loss like a stock. And on the platform Ethereum uses, they actually have a general ledger of every single transaction that has ever been taken place, just recorded right there. So there would be a lack of billables for an auditor. The effects of business: it is completely decentralized. So that would be funny on accounts payable, because for financing you would be going through a bank, it would be going through the stock market, you'd be going through any Ethereum user. It is 100% liquid, and with any change in business, there's going to be more elaborate scams that are in place. So social engineering would definitely change, so we'd have to adapt to that. And there are no fees to use the platform Ethereum has. Effects to consulting: crypto knowledge is very highly valued and sought after, simply because it's so new and not many people have studied it. And with more resources being freed up, there's more of a budget to be put to other uses. The future: there's no real value of cryptocurrency. The value is in the utility. People are concerned with this being like the dot-com bubble. So far, this has proven to not be the case, but you never know. But like anything that is put in place and implemented, it's not seamless. There will be bumps in the road, but once we get a standard of how to use it, like a worldwide standard where everyone uses, this could be the future.